What's up? What's up? I'm back. I didn't make it last night like I'd hoped to, but anyway, we're gonna get going here. I got some pretty good stuff for you. I talked about doing more Mitch, but I kind of changed my mind. It seems like with every day, Mrs. Kirk seems more and more questionable, and I don't know. Everybody tried, including myself, tried to give her a lot of grace at the beginning. You know, the whole grieving widow thing. But I don't know. The longer time goes on and the way she acts and things that are coming out, especially with the financials, it just really seemed like she had a lot of incentive to, if not directly do it, at least be involved. Uh, she was definitely a beneficiary, no matter what. So I do, I do want to start off and say that this episode is for informational purposes only, and it's based on public documents and the featured video. It does not constitute legal advice or accuse anyone of anything. And anything that I say in here, whether I actually say it or not, uh, is allegedly. All right. So this video, I don't know who all's seen it, but it is by a guy on YouTube called Danks, and he has really dug into this to the financials, and this right here is this right here is not related to TPUSA as a whole or in general as much as it is just Erica. This is literally a life insurance claim that was taken out on Charlie. Obviously, this would have been taken out before he was killed, but the the amount that it was taken out for, and I have no idea whether he knew about it or not. There, at this point, I don't know how anybody would know. Maybe somebody will dig that up at some point, but regardless, it's just really odd. And even if she did not if she didn't sneak around and get this policy on him and him not know it, even if that's not what happened, I feel like just based on the circumstances that when she found out this policy had been taken out, she definitely had to take advantage of it, and y'all see why. Let me start out. Let me start out by playing some, and then I'll throw in some my 2 cents worth every now and then.
We're going to take a look at this form here. So this is a form called a 990. All right. It's a tax return that every nonprofit organization has to file with the IRS every single year. It's public. Anybody can look it up. These are financial disclosures that organizations like Turning Point USA are legally required to submit annually. And I've been going through TPUSA's 990s for days, going on weeks now, page by page, line by line. And I've gone through every single IRS documentation from every single Turning Point entity. All right. There's actually 4, but we're focusing on Turning Point USA Incorporated, the LLC's 990. Now, I've been looking for irregularities. I've been looking for patterns, and I've found something that is going to shatter everything that they've told us about what is going on about the life insurance policy of Charlie Kirk. This is a Schedule L. We're going to get right to it. So if you look up here, it says Schedule L, all right? Transactions with interested persons. So essentially, this is dealing with involved insiders, board members that they do deals with. There's an entry in here. Essentially, these are loans, okay? So you can see here, it says loans to and or from interested persons, okay? So it says name of interested person. So that means that they're giving a loan to this company, GGLF 2023 LLC. All right. this stopped me, and it made me, I had to go through it a few times because I didn't quite grasp. I had to reach out to a buddy of mine and ask him because, this isn't my wheelhouse. I'm not a tax advisor. You know what I mean? So this is new territory for me. But once I did, that's why it's taken me a few days to come out with this research, because this is something that shattered me when I realized what was going on. So look at this entry here. This is a loan to, okay, not from, it's name of interested persons. If it was for TPUSA, it would be of to TPUSA, okay? The interested persons for the loan is GGLF 2023 LLC. It's a loan for $350,000. And I'll zoom in there so you can see it. The original principal amount, okay, from Turning Point USA going over to something called GGLF 2023 LLC, as you can see right here. All right. Now, the purpose is a split dollar life insurance policy. All right. Loan to or from the organization. You have to understand what this means. All right. So the organization is always going to be referred to as TPUSA because that is the organization that is filing this 990. So any entity or mention of organization is always going to be the organization filing the 990 or the documentation to IRS. So it says relationship with organization, purpose of loan, loan to or from the organization. It's from TPUSA to GGLF 2023. And it says this line right here, read it with me. It says, entity owned by president or CEO of.
That is really, really important. One would think that the way it would be structured is that since Charlie Kirk was the, CEO, what have you, of Turning Point USA, that when it says relationship with organization, it would say owned by Charlie Kirk. I mean, that was just that's the way, at least common sense would tell me that it would be. But with it being worded like this, entity owned by president / CEO means that this LLC is owned by the president or CEO of Turning Point, no matter who that is, even if it's somebody different, no matter who it is, they are going to be the they're going to have this GGLF 2023 LLC.
The organization. So relationship with the organization, this entity, the LLC, is the entity owned by the president and CEO of Turning Point USA for a split dollar life insurance policy. So it's a loan from TPUSA to this GGLF 2023 LLC that is owned, the LLC, GGLF, is owned by the president standing of TPUSA for a split dollar life insurance policy. So they loan money to
which means if and when that policy is collected, then all of the benefits don't go to one or the other. With it being a split dollar policy, that means some of it would go to the GGLF 2023 LLC, and then part of it would go to TPUSA. So in that case, the owner of the LLC and the CEO or president of Turning Point USA, it's a win-win because they're one and the same. So whoever happens to be the president or CEO of Turning Point USA wins both ways because they're collecting both halves. One's just got to quote unquote go to Turning Point, and the other part will go to the LLC.
GGLF, who is owning that company, which is the president and CEO of TPUSA, for the original principal amount of $350,000 with a balance due of $355,268, $355,000. All right. It doesn't say entity owned by Charlie Kirk. It doesn't say entity owned by Charles J. Kirk. Entity owned by president and CEO and or CEO. Do you understand what you're looking at? They didn't tie this to a person, okay? Whoever holds this document, whoever holds the title of president and CEO of Turning Point USA owns this LLC. Charlie Kirk was the president and CEO. So Charlie Kirk controlled GGLF. You follow me, right? But what happens if Charlie Kirk isn't the president and CEO anymore? Because that person is just a title on this document. All right, look at it again with me. Entity owned by president, CEO. It has no name on it. And now I will say in the filing, okay, if we go to the initial filing, it doesn't have, because Wyoming doesn't require the names of the people. It's a kind of like Nevada, like Delaware, you've been seeing in the news lately on social media. They don't disclose who actually owns a company. It's secretly hidden behind the filing, right? So that's not disclosed. But
All right, hold on just a second. Let's have a look here. Just so we don't get too far ahead, I just want to go through some points here, some key points, just to make sure everything's real clear. An IRS form 990 Schedule L, it's part of an annual tax return required for tax-exempt organizations like Turning Point to promote transparency in their financial dealings. Schedule L specifically reports transactions with interested persons, such as loans, grants, or other exchanges involving insiders like officers or key employees to help the IRS detect potential self-dealing or misuse of funds. In TPUSA's 2023 filing, it discloses a $350,000 loan to GGLF 2023 LLC with a balance due of $355,268 explicitly for a split dollar life insurance policy on Charlie Kirk. Split dollar arrangements allow shared ownership of a policy's premiums and benefits where the employer, TPUSA, might recover its costs from the death benefit while the employee or that LLC or their entity gets the remainder. So basically, since Turning Point made the loan, then when that policy is collected on, they'll get their $350,000 or $355,268. They'll get it back, and then the rest is going to go to that LLC that actually took the policy out. Let's see. So see what else I've got here. All right. I think that's good for now. Let's see.
But the original filing of this was through a tax law firm. Okay. So let's get back to this document and let's talk a little bit deeper about what this is. They didn't tie it to a person. They tied it to a title. Whoever holds that title is the person who owns the LLC. Again, Charlie Kirk was CEO. He owned that LLC. He died. What happens if someone else holds the title of that LLC? Someone else controls GGLF. Someone else controls the loan to the life insurance policy. The money gets paid out to somebody else. That doesn't follow the person. It follows the title. The money follows the title. Why would you ever set it up that way? Why wouldn't you just write entity owned by Charlie Kirk? Unless you were planning for a scenario where,
if you think about it, so let's just say in a perfect world, everything's totally innocent. No, no taking out spouses for big time insurance money. In a perfect world, let's say Charlie Kirk decided that he wanted to take out another insurance policy, and he created this LLC, and he decided, okay, this LLC is going to take out a big policy on me, so my wife and kids are set, even though he probably had plenty of other health or life insurance. But let's say that's what he did. What in what world would you ever link that to the title president or CEO Turning Point? Why would you ever do that? Yes, I know people say that he wanted Erica to become the president CEO, but there's no guarantee of that. And obviously he had to have understood that. So with him tying it to that title like that, if by chance, Erica said, I just can't do it. I can't do it. I just too brokenhearted, whatever. I've got to be with my kids. I can't do it. They would have had to have named another CEO. So in that case, that life insurance policy is going to be controlled by this other CEO, because that GGL, whatever it is, GGLF 2023 would then be owned by the other CEO. So basically, it makes absolutely no sense for Charlie to have taken out this policy and structured it this way. So either A, he wanted to take out this policy and he said, yeah, let's create this LLC. And then he trusted somebody to do the right thing and structure it, in such a way where his kids and wife would be guaranteed, the benefits from it. So I guess that could have happened, or could have been even worse than that. And this whole thing could have been done from the start, been taken out without him knowing it. Regardless, I see no way in the world that he knew how this was structured if he knew it existed.
Charlie Kirk wasn't the CEO anymore, unless you were planning for something that exactly what had happened. All right, I'm going to show you the timeline so you can really understand what's happening. And so we can figure this out together, because I can't figure it all the way out. But I'll tell you what, I have figured out why Erica Kirk is the CEO, in my humble opinion, allegedly. So I need you to pay attention, because this is where it's going to get dark. All right. May 15th, 2023, the LLC of GGLF 2023, created in Wyoming, organizer of Stephanie L. Hooper. This was set up from Charleston, South Carolina tax attorneys who specialize in a specific type of tax law. Okay. Now, the founder is David Taylor, and I'm going to show you their firm's website, taylortaxlaw.com. All right. And an uncommon tax law firm. All right. And from the founder himself, says, I'm motivated by taking on a problem which others have said is impossible to solve, and which has a life-changing impact on our clients if solved. I solve the problem by being able to utilize 3 decades of experience. What is a great way to live life? By changing the lives of our clients. Why don't they have their information on their uncommon? What is an uncommon tax law firm exactly? I'm kind of curious on what that means exactly. What's interesting?
It means it's shady as hell is what it means.
As well is that their staff has no mention of the people that sign the documentation as attorneys who actually are on the forms that you're going to see right now. Initial filing. Okay, the initial filing for GGLF 2023 LLC from the Wyoming Secretary of State, it shows right here, limited liability company. The organization is GGLF 2023 LLC. The name and physical address of the registered agent is 30 North Gold Street, Suite R. Mailing address is also that. So the LLC, GGLF, the loan company that took out the life insurance for the president and CEO of Turning Point USA, is the same address signed by Stephanie L. Hooper, working for Taylor Foley Law, okay, attorney at law, phone number and everything. This is so crazy. Stephanie L. Hooper, look at where this company is located at. This is important for all of us to understand so that we can go through this together and you can understand the situation that's being had right now. A $350,000 loan went to a building that has no company name on it for GGLF. It's registered to other companies, and an art studio or what have you, Souvenir LLC, is there instead. That's actually has business hours. So they're obviously a location. They have, I don't know, they have an entity, right? There's pictures and stuff like that. I mean, I don't know if there's even pictures, to be honest with you. Anyways, let me get back to the timeline. So back to the timeline. TPUSA loans $350,000 from TPUSA to GGLF. This is essentially for Charlie Kirk. All right. The loan is for Charlie Kirk. March 2024, an annual report was filed and everything is normal. All right. Wyoming annual reported submitted active. May of 2025, Wyoming then sends a delinquency notice to GGLF 2023 LLC that nobody has paid, and those taxes of $60 is the amount owed. Then, so that's in May, then a month, 2 months later, 60 days later, the LLC is dissolved. So Wyoming dissolves GGLF for non-payment, $60 unpaid fee, kills a multi-million-dollar structure. The beneficiary now does not exist. Okay. July 9th of 2025, $60. Nobody pays it. The entity holding a multi-million-dollar life insurance policy is dissolved over $60.
And we're roughly a month out from the day that Charlie was killed. So, yeah, we just got to kind of keep that in mind.
Now, watch what happens next. September 10th, 2025, Charlie Kirk is killed. When Charlie Kirk dies, the entity does not exist anymore, okay? He's dead. The LLC has been dissolved for 63 days, and insurance beneficiaries does not exist legally because there's no president or CEO of TPUSA technically on that date, right? LLC dissolves.
Therefore, nobody can own this LLC. Even though it was dissolved, nobody could own that LLC because there is no president or CEO. It says plainly that the owner of the LLC is the president and CEO of Turning Point.
A couple months later, 63 days later to be exact, I think it is, Charlie Kirk is assassinated. Then 8 days later, Erica Kirk becomes the CEO, the beneficiary of the life insurance policies company, which is a dead company. All right. She's named president / CEO of TPUSA 8 days after her husband's murder, now also owns and controls GGLF 2023 LLC. Let that sink in for a second. Okay. September 18th, 2025, 8 days after Charlie is killed, Erica Kirk is named president and CEO of Turning Point USA, which means that she owns LLC GGLF 2023.
And everybody wondered why she rushed into it like she did. Why not appoint an interim? Why not, why not go home, be with the kids, do your mourning, get your life in order. And then, maybe next year come back and take over Turning Point if that's what you think you need to do. If that's what Charlie wanted, then throw in an interim, throw in a temporary CEO just to run the place until you get where you can. Then you come take over. But as we're about to learn, that was absolutely not an option. And somebody had to know that. This didn't all just happen.
And then on December 3rd, Okay. LLC is reinstated. Okay. Someone brought GGLF back from the dead back to life. That person is Virginia Brown. There's no signature. It's a typed name. I have it right here. Okay. Wyoming Secretary of State, GGLF 2023 is effective dissolution 7/9/2025. And then December 3rd, 2025, Virginia Brown of the same Taylor tax law from registration. So they're running this registrations tax company out of, I guess, Wyoming, okay, for God knows why, filed 84 days after Charlie Kirk was killed. Someone filed the paperwork. Why? And why is it an attorney with no signature? And why is it a Wyoming company from an entity that's based out of Charleston, South Carolina called Taylor Tax Law? I stayed up for the last few days. Honestly, I've barely slept trying to figure out the answer to the question, why December 3rd? Why midnight? And what deadline were they racing against? Again, 7/9/2025, they were dissolved. 12/3/2025, they were reinstated. This is the life insurance policy company that received the loan from TPUSA. This is already self-dealing, okay? President of TPUSA gave himself a loan to his own LLC in the name of $350,000, which is illegal. That is a way for you to receive money without paying taxes. And who is going to question you loaning, say your founders and all the other people, donors? They're not going to ask you and dive deeper into a company you gave in $350,000 to. Probably not very typical. All right. I'm sure big organizations give loans all the time to other companies. But GGLF 2023 served one or two purposes. There's two avenues here, and we're going to get deeper into it. But you must know that 90 days after Charlie Kirk had been killed would be December 9th, okay? Which is 6 days before this was signed, okay, by Virginia Brown, 6 days before. Under ERISA regulations, insurance companies have to make a decision on life insurance claims within 90 days of receiving the claim.
Yeah, so just to be clear, I don't think you worded that quite right. When this LLC, this GGLF 2023 LLC, when it was revived, when the papers got filed and it got brought back, was 6 days before 90 days after Charlie Kirk's death. And as he just said, the insurance company has 90 days to make a decision on paying out that life insurance policy. So you got done 6 days before the cutoff for the life insurance money payout. That's when this LLC was revived.
Okay. If you file a claim on the day that someone dies, the insurance company has 90 days until to pay or deny. So September 10th plus 90 days equals December 9th. December 3rd is 6 days before December 9th. But here's the thing. When Charlie Kirk died, GGLF was dissolved. It did not exist. Insurance companies cannot pay death benefits to an entity that does not exist. If the insurance company runs a basic check, all they do, they would see that the beneficiary LLC was dissolved. It's dead and gone, so they don't have to pay it out. But within 90 days, if they have and also keep in mind, they would have to redirect the payout to the estate. That doesn't necessarily mean that just because the LLC is dissolved, that they're not required to honor the payout. That's not necessarily true. But it would say that they would have to directly pay the beneficiary instead of the LLC covering up who the money's going to. Do you understand? Although it does say that the LLC is the president/CEO of Turning Point USA. It's very convoluted. They would have to redirect the payout, all right, to somebody else, not the LLC, unless someone resurrected the LLC before the deadline, and unless someone brought it back to life so it could receive the money. But here's what actually kept me up late every single night. Actually, I haven't slept. It's 12:30 p.m. Pacific Standard Time, and I have not slept. I've been researching this all evening and morning. Who has the authority to reinstate a dissolved LLC? Only the owner. Who owns GGLF LLC? Again, the person that reinstated
The CEO of Turning Point USA, aka Miss Erica Kirk.
it is Virginia Brown, but this is an attorney. All right. The actual person who owns it is the president and CEO. Who was the president and CEO of TPUSA on December 3rd of 2025? Erica Kirk. She became CEO 8 days after Charlie Kirk was killed, 76 days before the reinstatement. So when the LLC was brought back to life at 12:05 a.m., I don't understand the urgency here. Why is it at
The only thing I could think of, first I couldn't understand it either, and I may not understand it, but my best guess, I wouldn't even think that most places would allow something like this at midnight. But since they do, obviously, in Wyoming, my best guess is there's a lot of eyeballs on it, and even though people are digging and people like this still find these things, with them doing it at midnight, maybe less chance of more eyeballs getting on it, less notice, less, publicity. I don't know. That's the only thing I could think of, and that may not be it. I really don't know, but that was my best guess.
12:05 a.m.? We could find it right here. 12:07 a.m. I'm sorry. Wyoming on this third day of December 2025 at 12:07 a.m. has been filed for reinstatement. Do you see it now? Erica Kirk, it's her LLC. It wasn't Charlie's LLC anymore. It's not. Do you see why she's the CEO? If they're supposed to pay out $20 to $50 million to this organization that was taking money from donors into this as a loan, using it as a life insurance policy, it dissolved. I don't understand that part in particularly. That's way out of my depth, but I do understand the fact that the president it's not named Charlie Kirk, because you can't give a loan from TPUSA to Charlie Kirk's company. That isn't the way it works, because then he's not, like, first, they haven't even paid it back. There's still a debt on it. There's still a debt on the loan as of this time, as of the filing. All right. So all the way through 2024, they haven't paid anything. So that means two things: that Charlie Kirk had received money, or the president and CEO has received money, which was Charlie Kirk. And that way you don't have to explain to anybody that you're receiving more funds than your allowed income, that your salary. So this is double dipping. All right. Not only that, they use that double dipping funds as life insurance policy money in case something happens, or if it was planned. Now, step one, Charlie Kirk dies. Okay. Step two, GGLF is dissolved, has been since July. The beneficiary does not exist. Step three, someone needs to find and file an insurance claim, but the beneficiary is dead. All right. Then you move to step four. Someone realizes we need to resurrect the LLC. All right. So they had Virginia Brown do it. Who owns it? The president and CEO of Turning Point USA. Then Charlie Kirk is dead, which is step 5. 8 days after Charlie dies, Erica becomes the president and CEO. Step 7, now Erica owns GGLF. Now Erica can reauthorize the instatement. Step 8, the Charleston attorneys, the same ones who set this up in 2023, file the reinstatement at 12:05 a.m., 6 days before the insurance deadline. And then step 9, the GGLF exists again, so it makes the entity able to obtain the payout of the life insurance as opposed to the direct beneficiary. Then you have the insurance paying out $20 to $50 million. That money goes to GGLF and it's hidden behind the actual LLC. There's no
$20 to $50 million. 20 to 50 million incentives to get rid of your husband. I mean, it's hard to look at it any other way. Like I said earlier, there is no way that I can see Charlie Kirk intentionally setting this up this way. If he wanted to make sure there was some type of security, a big insurance policy that was going to get paid out in the event he died, what would motivate him to do it in any other way other than to guarantee that his wife and kids ends up with said benefits? And the way this is structured is it's not going to Erica Kirk. It is going to the owner or president or CEO of Turning Point USA, whoever that happens to be. Charlie was a smart man. He may have wanted Erica to take over in the event that he wasn't there, but he also was, I mean, he was smart. He knew that there was no guarantee of that. Anything could happen. What if, God forbid, something had happened to both of them? Guess what? The board names a new CEO, and all of a sudden he owns this LLC that is $20 to $50 million richer for this insurance payout. What about his kids? So it's just ludicrous to think that Charlie had anything to do with setting this up. Now, like I said, there is the other option that possibly he wanted this other insurance policy. He wanted that extra cushion in case something happened to him, and then trusted, his people, whoever, maybe his chief of staff, somebody like Mikey McCoy or any one of those people there, and his attorneys, maybe he trusted that they would do the right thing and set this thing up the normal way. But there is no way that he intentionally set this up to be paid out to whoever happens to be the CEO of Turning Point. There's just absolute no way that I can't understand for the life of me why he would. I don't think he would. There's really not much convincing me that he would. Either. And, the way everything was done last minute with days to spare, it really seems like somebody knew all along that these steps needed to be taken. And the other thing that's curious to me is, they revived this thing 6 days before the 90-day window cutoff of when the insurance company pays out. So this LLC comes back to life, and then they have 6 days for that insurance company to make a decision and route funds to them. I've never seen an insurance company do anything in 6 days. Maybe they do there, but it makes one wonder if there wasn't some type of communication, colluding, whatever, with somebody at the insurance company. I mean, maybe not. Maybe that's just dumb. But it's hard to believe with $20 to $50 million on the line that they would risk losing it over cutting it close. Like I said, it wasn't possible for those funds to be paid out to this LLC because it literally didn't exist until 6 days before that deadline for the insurance company to pay out.
No name that we can find there because it's part of the state tax law. GGLF is owned by the president and CEO of TPUSA. The president and CEO is Erica Kirk. Okay. She didn't become CEO because she was qualified. She didn't become CEO because it was Charlie's dying wish. She became the CEO because that's how this was structured to work. That's how the money moves. Okay. She needed the title to own the LLC. she needed the LLC to collect the insurance, and she needed the insurance to get the $20 to $50 million payout. That is why Erica Kirk is the CEO of Turning Point USA. And it gets worse. There's actually a legal doctrine in Wyoming called relation back. When you reinstate a dissolved LLC in Wyoming, the law treats it as if the LLC was never dissolved. So it relates back to the date of dissolution, which means legally GGLF is now treated as if it was existed from July 9th through today and never dissolved, which means legally. So that's, through that timeline, that's why it was established within the 90 days. It never dissolved in the first place, which means legally the beneficiary was valid at the time of death. You get what I'm saying? Even though it wasn't, because of the loophole law, for the fact that if you back and
in other words, they didn't have to wait another 90 days once this company was revived from the dead. Because like he was saying, they treat it like it was never dissolved. If like they do in some states, where they don't treat it as if it was never dissolved, then whenever it was revived like that, there would be another 90-day timer that started. And it would be another 90 days the insurance company would have to make a decision and pay out. But since with it being revived, they treat it like it never was dissolved, then, like he said, they treat it like it was all in good standing all the way from back in July when it was created. And no long waits. 6 days later, they got their payout and they were good to go.
Resolve the dissolution, you reinstate the LLC, then that means that it was as if Charlie Kirk, who was the president and CEO, who died on September 10th of 2025, even though it dissolved in July, because of the state law on taxes, that means that Charlie Kirk is the beneficiary or the person who gets paid out. And that means that it goes into the LLC's hands. All right. So even though the LLC was dissolved 63 days before he was killed, they resurrected it to rewrite history, and they used legal fiction to make a dead company look alive again based off of the relation back doctrine to validate a beneficiary that didn't exist when the insured person died. And the only way any of this works is if Erica Kirk is the CEO, because that's who owns the LLC, because that's who controls the money, because that's what the Form 990 says. Entity owned by President/CEO of Turning Point USA, right here. Okay.
And there's no way in hell Charlie Kirk knew that was the way that was structured. I'm sorry. I'm going to keep saying it. That has to be the number one takeaway. There is no way Charlie Kirk knew that who this insurance policy, huge insurance policy, got paid out to was just whoever happened to be the CEO of Turning Point. There's no way. He was smarter than that. He did not realize this was set up this way.
So let me ask you something. Why did they let it dissolve in the first place? $60, a $350,000 structure holding a life insurance to pay tens of millions, and they let it die over $60. TPUSA has $150 million in revenue before that. Okay. So 800 employees, lawyers, accountants, the Charleston tax attorneys who set the whole thing up. Remember, I mentioned to you what they do. They specialize in uncommon law practices for taxes. All right. For 2 months, from May to July, nobody paid $60 for this life insurance policy. I do not believe that's an accident. I think that it was dissolved on purpose. What if the LLC needed to be dissolved while Charlie was alive? What if the only way to transfer control of GGLF from Charlie to Erica was to let it die, make Erica CEO, and then bring it back? What if the dissolution wasn't negligence? Because I don't think it was. This was carefully planned. What if it was the plan? I want to be very careful here. I'm not accusing anyone of any heinous acts. There's an accused shooter in custody. There's going to be a trial. I'm not accusing Erica Kirk of knowing about all of this structure. I don't know what she knew. I don't know what was told to her. Okay. I don't know her involvement. I'm not saying this was murder for money. I'm not saying this was money for, being ready for the situation, but I am saying that the structure was built specifically like this. And I'm saying it was activated exactly as it was designed, just as Taylor Foley law says they do uncommon tax law practices. I'm saying who knew is what I actually want to know, is what I'm asking. Here's what really gets to me is that this is donor money. Regular people sent $50, $100, $1,000 to TPUSA because they believe in something. Sure, there's plenty of billion-dollar donors that are giving millions for their own intentions, and that happens in every organization for the most part. But most of this money comes from good people, hundreds of thousands of Americans that are conservative, believe in conservative values, and that money funded the premium on this life insurance policy that could have been double acted as hidden payments without taxation to Charlie Kirk or the president of the company. There's multiple ways that this could be used here. And now someone's collecting or going to collect through the LLC $20 to $50 million from Charlie Kirk's death. And I want to know if the donors knew. Did anyone tell them that their money was going into a life insurance scheme structured to pay whoever out that held the CEO title? Did anyone disclose that if Charlie Kirk died, the payout would go to the organization of GGLF of a Wyoming controlled by assessor? I don't think they knew that. I don't think that anyone told them. And I think this was hidden on purpose and in Schedule L of Form 990 that nobody really reads. And now the donors are going to find out that someone from some other place that they don't even know who the hell I am, this is how they're going to find out, because I'm bringing the evidence. This is so strange. They have like multiple addresses, one in Wyoming. They're using it as a registered agents company. I mean, these are not amateurs. These are specialists in creative transactional structures. They knew exactly what they were building, and it worked just how it was designed. So why is Erica Kirk the CEO of Turning Point USA? Because the Form 990 says entity owned by president CEO. Because if GGLF was dissolved when Charlie was died, then someone needed to own the LLC to reinstate it. And somebody needed the LLC to exist to collect the insurance money and also to pay back the loan. Okay, because someone needed that $25 to $50 million. That's exactly why. Because
they needed it or wanted it. Just to simplify all that, the reason she is the CEO of Turning Point USA is because, I mean, she got paid $20 to $50 million to do it, and that money would have not. That the only way for her to collect on that money was to be the president or CEO of Turning Point USA. That's all there is to it. Very simple. And like I said, Charlie did not know this was structured this way. And now, you know what? Let me go back on that a little bit. He may have. He kept talking to people about how they're going to kill him. Told Candace that, he messaged Dan Flood. He messaged Andrew Kovac. He said several times that he thought that he was going to die young and that they were going to kill him. Especially after hearing this, I mean, I often wonder, maybe he did know about this, and maybe he knew. Maybe he knew. I don't know. Maybe he hoped she wouldn't go through with it. Allegedly. Maybe he found this out.
The only way to make all of this happen was to give Erica Kirk, I'm losing my voice over this, was to give Erica Kirk the title. That's the only way. If that's, I mean, so you were going to give it to Mikey? You're going to give it to, who are you going to give it to? Boyer? No. So now this is starting to make sense, but it is so corrupt. So let me tell you exactly what violation is set here specifically, because this is important. After everything I've showed you isn't just questionable, okay? It may be illegal. So the violation under section 501c3 of the Internal Revenue Code, tax-exempt organizations are prohibited from allowing any part of their net earnings to inure to the benefit of any private shareholder or individual. That's called private inurement. It's an absolute prohibition. It's an absolute zero tolerance. The IRS defines inurement as an insider, an officer, director, key employee, or any.
Okay, that's enough of that. I believe everybody understands and agrees that it's illegal. And whether it's illegal or not, it's definitely illegal to kill your husband, your boss, your coworker. So no matter how much money is involved, killing some murder is illegal. And that right there just really, really, really adds a lot of motive to several people, but one in particular. I mean, hold on just a second. Let's see here. I want you to look at this. You see them eyes? Does anybody think that she would be totally, completely incapable? To me, that looks like a very capable set of eyes. I know that's wrong. Allegedly. I don't know. What do y'all think? Let me know in the comments. It's definitely very interesting. And yeah, I think the gold grieving widow thing is that ship's done sailed a long time ago. I think that's over with. I think it's time for not just us people, but I think it's time for maybe some law enforcement to start looking a little closer to home. It's crazy to me that they haven't from the get-go. If it was anybody else in the world, the first person they would have gone to would be the spouse. And according to her, she's got his telephone, which should be evidence, and his necklace, which should be evidence. So I don't know. Seems to me like law enforcement needs to get their shit together and figure out what really happened here, because there's really no indication that they're looking into any of this. And I can promise you now, if it was any one of us, any other of us, we would never get away with this stuff. And even if this happened to be done, on accident or what have you, totally, completely innocent, we would definitely have to answer for that. So I don't know. Like I said, time to take a closer look to home. All right. I'm already been on here an hour. I was going to try to keep it closer to 30 minutes. I'm sorry I went long. I'm going to get off here. I'll be back in another day or two. I'm not sure exactly yet which day. I probably be Monday evening. But we'll just have to see. All right. Well, I guess I'm going to get out of here, and I will see y'all guys next time. Thanks for watching.